Hi, welcome back. This is Corporate Radar, and on our radar right now is realty major DLF. They are re-entering into the Mumbai property market with an SRA project in Andheri of 2.5 million square feet. Do note the company has also managed to reduce its debt need to deleverage its balance sheet, and the street is like that. To discuss business opportunities and demand trends, we're joined by Ashok Kumar Tyagi, the managing director at DLF. Mr. Tyagi, good morning and thanks a lot for joining in. You know, before I ask you about all of these plans with respect to the residential business, the move in Mumbai, etc., I just want to understand that recently the promoter entity sold a bit of stake. I wanted to know what the reasons for that are, and is there any plans to sell more stake in future?
Okay. So, good morning, Sonia. You know, the promoter entity, I mean, all the promoters put together owned about just, short of 75%, which is the maximum public float. KP Singh, who is the chairman emeritus of the company, and in that sense, who's sort of been the guiding light of the company for the last 50 odd years, had a small stake of about 0.7%, which he sold off for about 750-800 crores. And predominantly at the stage of life that he is in, he wants to, set up a charitable foundation and use this money as the corpus for that. So that was really the primary driver for the stake sale, the way we understand it. I don't think that there is any move by any of the other promoter families by any of the other promoter groups to liquidate their stock further. But yes, this was, I think, a one-off, predominantly driven by the chairman emeritus's, vision for setting up a charitable foundation now.
Okay, so you're confirming, or rather assuring investors that this was a one-time thing and there would be no more big stake sales by the promoters. Is that fair to assume?
At least not in the short term, for sure. I mean, I can't give you a 20-year guarantee, but yes.
Sure, of course. No one can give a guarantee for about anything, right, in the next 20 years.
That's
but
fair.
Another thing I wanted to check.
And also I wanted to sort of reassure you further that that our chairman, Rajiv Singh, who owns the bulk of the promoter stake, not a single share from him was sold.
Okay. So not a single share from Rajiv Singh was sold. Got that. And that's important, actually. It's an important clarification. So thank you for that. I also wanted to understand the REITs listing, right? And we've spoken about this at length.
As we had disclosed at that time, with a reasonable degree of enthusiasm in conjunction with GIC. I mean, 2 years, obviously, a lot has changed. The COVID, induced vacancies. Then the higher interest rate regime kicked in. So, I mean, the sort of, the current listing performance of the listed REITs in India has not been very great. So obviously we are ready in that sense from a listing standpoint. We had certain restructuring and mergers, etc., to be done, which are now all underway. So there are no structural, speed breakers to the REITing process. But I think the REIT will happen driven by two factors. A, as and when the interest rate regime and the overall markets improve. And B, frankly, to a large degree, it will be driven by when GIC wants a roadmap for at least, either a mark to market or a potential exit for their investment in Cybercity. And frankly, I mean, I don't think that either of them is going to happen in the short term. But yes, we are REIT ready. We continue to be REIT ready. But I do not think that the REIT is happening in the immediate short term.
Okay, not in the immediate short term. And it'll also, an important indication will be when GIC wants to, as you said, mark to market. Got it. Mr. Tyagi, good morning. Prashant here.
Sorry, Prashant, just to clarify further.
Yeah.
I mean, I would not be wrong in saying that for us, the primary driver of the REIT will be GIC's desire, because we as DLF, frankly, do not believe that it will be a hugely value accretive thing for us. Neither are we looking at divesting our own stake in Cybercity.
Yeah.
So, but obviously, as a responsible partner to GIC, as and when GIC does decide that now is the good time to sort of go to the market, we'll support all those efforts.
No, that's understandable. And thanks for that. Mr. Tyagi, you also said as one of the conditions, as and when market improves, I mean, market is has been an improved state for for some time.
The market is not the stock market. So if you look at the interest rates today,
I'm saying I don't mean the stock market. I mean property markets. I mean, I remember last time when we spoke. Yeah, I mean, and so even with interest rates where they are, and things are looking pretty good. So I just want you to kind of tell us, since the last time we spoke, how things been. 40 units left. This is during our last chat. All of them gone.
Not all of them gone, Yeah, so Camellia continues to obviously sell at a fairly high clip. There are, I think, now maybe about 30 odd units left. I think they're selling at about 8 to 10 units a quarter. The sales performance, I think, across the board, from the more moderately priced end products in the farther sectors of Gurgaon or Panchkula, to the luxury and the super luxury segments like Camellias. I mean, it's been a across the board enthusiastic response which continues. To some degree, our success in Arbor in Q4, where we, as you know, we sold almost 8,000 crores of apartments in within the quarter, did mean that for the first 2 quarters we were slightly short of launches. A lot of our launches are in the pipeline now, and I think in the second half of this year you will again see some very significant launches coming to the market in both the premium and the luxury segments. And I think the residential market, I mean, even if you look at the performance of the other listed players, I mean, the residential market, I think across the board and across geographies and across economic brackets, I think is doing very well. I mean, ironically, if at all, the one segment which I think is not growing with as much clip is possibly the lower end affordable, where potentially maybe the mortgage loan rates have had a higher impact than they've had at the upper end of the market.
A sales number of close to 13,000 crores approximately. Do you think you'll outbeat that number? I think you as well have hinted that that's gettable in the past. And also then?
Okay. So, Nigel, 2 things. One, on if you look at our analyst presentation of June end, we had an opening inventory of about 5,000 odd crores, which was by inventory, I don't necessarily mean finished goods. I mean inventory of projects which had been launched. And we have a new launch pipeline during the year of almost 20,000 crores. So we will have a total availability of almost 25,000 crores of products to sell. We are assuming that somewhere what our guidance has been is about 13,000 for the year. But obviously, as the Q3 and Q4 launches happen, and if they do meet with a more enthusiastic response, like in the case of Arbor last year, I mean, these numbers could have an upside risk, if you will. But our official guidance stays at 13,000 crores, which is what we have told the market also. On the rental piece, the offices leasing, which had actually, the vacancy levels, which had actually gone up to almost 15-16% at the peak of COVID, are now back to about 10%. There also, the number is slightly skewed because of the SEZ vacancies, which are higher than the non-SEZ vacancies. And I think there's no immediate short-term solution to the SEZ vacancies, because everybody, I think the entire industry, including the listed REITs, are waiting for the government's DESH guidelines to be notified, which hopefully should make it easier for SEZ units to be also used for non-SEZ purposes. So we are all waiting for that to happen. But I think overall, we are now at a 90% odd occupancy level. The occupancy level in the non-SEZ spaces are in the early 90s. The occupancy level in the SEZ spaces will be slightly short of 90.
Okay, before we let you go, the main reason for which we invited you, right?
Okay, so obviously there is competition. If you recall, we had one project in Mumbai in partnership with Shaparji, and like at least a moderate entry into Mumbai market if we found the right product. This particular project near Andheri has potential of almost 2.5 to 3 million square feet of saleable area in the LOIs that exist, with a potential for an upside later on. So I mean, you guys know the pricing in that area far better than us, but we do believe that I think eventually this could be a significant amount of maybe a 6,000 to 7,000 crores of sales potential on the phase that is currently available, and potentially grow forward further add on. The first launch of this project should hopefully happen, I'd say within the next 9 months from today. And it should be about 900,000 to 1 million square feet of saleable area, which I think will translate to whatever RERA carpet it translates to. And I think that should be hitting the market hopefully before March, latest before June.
We wish you all the best, Mr. Tyagi. Thank you very much for joining us. And, we'd love to speak more about the Mumbai market on our next chat. Thank you indeed for joining us here on CNBC-TV18. Well, that's DLF.